Yo, what's good? It's me, Mushafex. How are you doing? A really important topic today, but first, I'm gonna show you the trade that I took today on New York Stock Exchange Open. And I traded S&P 500. I bought it, I longed, and it went kind of good. I go like, all take profit hit. But yeah, I'm gonna show you. I actually posted a video about it, like a live trade video. Like you can just go check it out. Yeah, I'm gonna do a little recap of it, and then I'm gonna teach you about breakup structures, how you can spot them in the markets, and why is it so important. But I'm gonna be honest, the breakup structure is really essential, so stay tuned, guys.
Okay, quick little recap before I get into the breakup structure topic. So, what happened here? I took this trade today on New York Stock Exchange Open. Okay, what did I do? Well, obviously, first I checked. We're bullish almost on every time frame. I checked that. That's checked. We're bullish, aka meaning that I want to buy, and price is most likely to go up. Okay, then market opens. I mark out this 50-minute low. I mark out almost everything that I see, like buy side. Also, this fair value gap, a concept that is coming soon. Don't worry if you don't know that. And all this liquidity is down here, buy side liquidity, and all this, everything that I saw. Then market opens, sweeps out this 50-minute low. I was like, okay, that's enough for me because we're so bullish. Okay, and then I see a breakup structure on the 1 minute right here. I entered, I got filled over here, and stop loss below this low, a little lower just to be safe. Okay, and then we come back, we fill this whole order block, and we sweep past it, continue up, take out the first take profit. I managed my position. I managed half of my position and closed this to break even. This stop loss to break even, that I don't lose anything, that I make bread only. And then price got even higher and all take profits got hit. As you can see, that's a great trade, I would say. But anyway, that's about that. That's a trade. That's a recap. Yeah, that's a recap. I took it today. So I also made a video on that where I recorded the whole trade live. So you can go check that video out. And yeah, that's about that. Alright, man, it's time to teach you about breakup structures, man. Let's go. We can start with basic. What's a breakup structure? Essentially, a breakup structure is a market structure shift. And we can use breakup structures as an entry, or we can even find the bias with it. So it's really, really essential for us SMC traders. But don't get it twisted. I personally don't use change of character or whatever that those other SMC traders use. No, I don't use that. I use only breakup structures. I don't change of character. I don't know what says change of character, but I'm gonna teach you my way. So stay tuned. So yeah, you heard breakup structure is a market structure shift, and yeah, we can use this as an entry or to find bias. Okay, how can we spot breakup structures in the market? Well, we know what's a high and what's a low because I've taught that to you guys. If you haven't watched that video, go. It's one of my first teaching videos. You can just go and look that up if you haven't, because you need it before you watch this. Okay, you need it. All right. Well, first of all, we gotta know: are we bullish or bearish? Are we in a uptrend or are we in a downtrend? So how can we know, are we in a uptrend or are we in a downtrend? Well, in an uptrend, we make, hold on, wait. In an uptrend, we make higher highs and higher lows, like this, higher highs, higher lows. As you can see, this is a higher high, this is a higher low. We'll make like that, okay? Alright, in this case we're bullish. Now a break of structure happens like this. Higher high, but then it comes down and it closes below this last low in an uptrend, okay? In an uptrend, when it closes the last low, closes below the last low, then it's a break of structure. Hope you understand. Okay, as you see, boom, and this is a break of structure right here. It has to close below the last low in an uptrend. All right, because we know what's a low and a high, so we can spot that. All right, in a downtrend, hold on. In a downtrend, basically same thing. We're in a downtrend, so we make lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, etc. In this case, the same thing. If we're in an uptrend, we need to break the structure in order to know are we bullish or bearish. It's switch the bias. Okay, basically, essentially. Obviously, it depends what time frame are looking at it. But if you want to find a setup like this, then you can use it as an entry. But it obviously depends. You need more confirmation. But yeah, we'll get into that later. Okay, in a downtrend, this is the last high in a downtrend. Okay, so we need to go and close above it. Close a candle closure, not a wick, a candle closure above the last high in a downtrend. Then we break structure. And what's most likely to happen here? We continue up, we make higher highs, higher lows, higher highs, higher lows, higher highs, etc. And if we break structure, then again, lower highs, lower lows, lower highs. You get it. You get the point. Remember that higher time frames always hold more power. I always say this in my videos because it's true. It's true. But let's say we are bullish, okay? Let's say we're bullish on higher time frames, but when we go into a lower time frames after a liquidity sweep, and then we can look for a break of structure in a lower time frame because we know that the bias is bullish on other time frames, so we're gonna buy after a break of structure in the lower time frames. I hope you understand, man. I hope you understand. Okay. All right. Okay. Now, how can we spot break of structures in the charts? This is actually quite easy, I ain't gonna lie, but let me just show you. Hold on. Let me go on hard time frames. This is an uptrend, and we go down. We make a low, a down candle followed by an up candle. All right. Then we make another low, but this time it closes below this low, as you can see. So that's a break of structure. Look at this. We make a low on an uptrend, we make a low, a down candle followed by an up candle. That's a low. And then we make another low. The candle closes below this low, and that means it's gonna break structure. Hope you understand. Okay, and then we continue down. Same thing here. Remember, this is high time frames, but so it's more official in these high time frames. Okay, same thing here. We're on a downtrend. Because the last time it broke structure, it was to the downside. So we're in a downtrend. Okay, and we make a high. As you can see, we make a high. Okay, we don't close yet. Okay, you can okay, we make a high. You can say, oh, a break of structure. No, it's not yet a break of structure. Okay, we make a high, then we make another high, as you can see here. Up candle followed by a down candle. We didn't break it here, but now we make an up candle followed by a down candle. That's a high, and after that we get an up candle closure above the high, and that's when the structure breaks. The structure broke, and we go up, and we're currently bullish on the weekly time frame. Okay, let's go with lower time frames. Okay, this price action is kind of bad, but all right. Okay, here this is a obvious downtrend. Okay, last time it broke the structure to the down. The last time it broke structure, it was to the downside, though. So that's why it's a downtrend. So that's why it's a downtrend. Okay. So in a downtrend, as you can see again. Hold on. Yeah, in a downtrend, we make this high. Why is it a high? An up candle followed by a down candle. Okay. What happens then? What happens then? What happens? Look. We don't make another high after that. This is still the high because we don't create a new one. But what happens here? This high closes above this high. So currently, so right now we're bullish. We're bullish in this time frame. We're bullish in this time frame. Break structure right here, right here, right here. A candle closure above this high. Okay. What does it do? What does the price do? It doesn't break structure to the downside in anywhere here. It just consolidates. Let's say we would enter right here. Obviously, I don't enter on these high time frames. Like this is a big. I'm a day trader, but this is an example. Okay. Let's say we would enter here on the break of structure right here. Obviously, this below here. Yeah, you can see target these highs, whatever, and went good because they break of structure. Okay. Cool. Okay. And currently, where are we, bullish or bearish? I'll give you some time. Are we bullish or bearish currently? We're bearish. Why are we bearish? Because last time the structure broke, it was to the downside. Right here. As you can see, we make a low, a down candle, followed by an up candle. And what happens then? This down candle closes below this low. So that's a break of structure, so we're bearish. Okay, hope you understand. Okay, S&P 500. Okay, that's a kind of bad example because we're booming. All right. Okay, look, downtrend. Last time it broke structure, it was to the downside. So it's a downtrend right here. A downtrend. Okay, what happens? This is actually a kind of perfect example. We sweep liquidity, but also what happens then? We sweep liquidity, this really big liquidity, buy side liquidity, we go up. Okay, we don't break structure to the upside yet. We're still bearish here. We're still bearish whatsoever. Then what happens? What happens here? Guys, what happens here? We create a high followed by a down candle. I mean, we create up candle followed by a down candle. That's a high. And then this up candle closure above the high. So that's a break of structure. So let's say I would enter off of this. I wouldn't actually, because you know I don't trade like this just based off a breakout structure. I need more confluences. Okay, below this liquidity. All right, and whatever you want to target. Obviously, this is unrealistic in forex pair, this amount, but you know, still, as you can see, it worked out for some reason. But in lower time frame, this ain't actually 800 pips. It could be like 20 pips or something. So how I basically use this strategy, on my strategy, I first check the bias, then I check the bias. Okay, how can I use the breakout structure in my strategy? Well, first I obviously check the bias. Are we bullish or bearish? Uptrend or downtrend? Then I want to see some sort of like a liquidity sweep or breakout structure, like before market opens. I mean, after the market opens. And then if we sweep liquidity or something, then I go to a lower time frame. It depends what pair. If we're on an S&P and we sweep buy side liquidity, then I go on S&P 500. I go to 1 minute, and then I look for a breakout structure to the upside if we're bullish on higher time frames, and then I enter. It's actually quite simple, but remember, trading can be difficult to the strategy can be difficult to understand at first, but trust me, you're gonna know it like the back of your pockets. All right, let me show you some more examples of a breakout structure. Okay, right here, what is this? Uptrend. Why? Because the last time we broke structure, it was to the upside. Okay, what then happens? We break, okay, uptrend. We create a low. Why? Because a down candle followed by an up candle. This is a low. This is the low, the weak, the prominent one in this low counts. We mark it. Well, what happens here? This big down candle closes a candle closure below this low. Okay, below this low. This is a breakout structure. Let's say I'd enter over this, like this. Liquidity. Boom. Okay, and what happens here? We flip the bias. Why? Because we break structure right here. We create a high, then followed by a low. Boom. But first of all, obviously, why did that happen in the end? You gotta put the puzzles, the pieces together to understand this. What happened before this breakout structure? We sweep out a lot of liquidity down here, aka market, the bank's taking out traders. Watch the liquidity vid so you understand. We sweep out these liquidities down here. We sweep them. Then we create a breakout structure. Then, why is it a breakout structure? Up candle followed by a down candle. Then, that's a high. Then this big up candle. Closure above this high. So that's a breakout structure. Again, rallies up. Simple as that. Simple. What happens here? Uptrend. Last time it broke structure, it was to the upside, so it's uptrend. Okay. What happens here? A down candle followed by an up candle. A low. This is a low. Okay. Then a down candle closure, meaning it's not moving anymore. Closure below this low. Breakout structure. Boom. Okay. We sweep liquidity. We go up. Break structure to the upside here. Up candle followed by down candle. Okay. Up candle followed by down candle. A high. then a candle closure above it, break structure to the upside. Okay, as you can see, it flips again. But why? You gotta be smart, man. It sweeps again, liquidity, sweeps the liquidity at once. Then, same thing, a low, a down candle followed by an up candle. This is a low and a big down candle closure below this low. So it's a breakout structure, and as you can see here, what happens here? Boom. Simple, bro. Okay. It's actually simple. Okay, let me find you an example what a breakout structure is not. Okay, let me just try to find something. Okay. All right. Bearish. The last time it broke structure was to the downside. Okay. Ignore this candle. Okay, this is a breakout structure. Why? Because a high up candle closes below above it, so it's a breakout structure to the upside. But before that, look at this. This is a weak. This is a high, a up candle followed by a down candle, an up candle followed by a down candle. This is a high. As you can see, it wicks it, but it doesn't close. It doesn't close above it. So that's not. This is not a breakout structure. This is not a breakout structure. Okay, it's not a breakout structure. This is a wick. This is basically a sweep. But after that, this is a breakout structure because it closes the body. The body closes, not the wick. Not the wick closes above it. The body closes above it. So that's a breakout structure. And as you can see here, we continue up. We rally up. We rally up. Okay. Man, breakout structure is actually quite simple, but it takes some time, obviously. Everything takes time. Greatness takes time. Okay. Okay. Gold on the 4-hour time frame. Are we bullish or bearish currently? Which one? Are we bullish or bearish currently? Uptrend or downtrend? It's an uptrend. I hope you said uptrend. Why is it a uptrend? Why is it bullish? Why? The last time it broke structure, it was to the upside. Why? As you can see here, you can just, okay, high, an up candle followed by down candle. Up candle closure above it. What's most likely to happen? Continue up. Because we even sweep a lot of liquidity down here. Man, it's easy once you get it, obviously. But like, break structure ain't that bad, bro. It ain't that hard. But don't worry if you don't get it just yet. When I learned breakout structures, I had to study it for some times, days. For some, it may take weeks, months. It depends, obviously. Like, it depends. But if you really, really want to study it, if you really want to learn it, you're gonna learn it quicker because you're all in, and that's a life lesson also. Like, when you have that emotional attachment to something, you're gonna learn it quicker. Obviously, I don't mean like be emotional in a bad way, but like you have to learn it in order. Like I had to learn it in order to, because I wanted to be a day trader. I wanted, and then I just had to learn it. So, hey man, that's about breakout structures. Hope you understood. Next video is gonna be about order blocks, so stay tuned. Order blocks, really important topic. Hey man, thank you for watching. You know, smash the like button, whatever you want to do, and you know, peace.